Hi guys, how's it going? It's Alraton checking. Welcome back to my YouTube channel. Today I want to get into investing for beginners. I've been investing for quite some time now, and there are things that I've learned in my investing journey. And in this video, I'm going to share some investing tips so you can become a better investor and make some money and just make this journey easy for you. Remember that none of my videos constitute as financial advice. I am not here giving anyone any financial advice. I am just on here sharing my investing journey. I know investing may seem very confusing, but I believe that it is for everybody in this day and age. There is enough information out there and resources to help you learn how to invest. And a lot of people are very much interested in it, but they are convinced that it is way too risky, so they cannot do it. But I would like to believe that if you take your time and learn how to do it and understand how it goes, it can actually get easier for you. You know that people are making money from it, and you wonder how you can do it as well. Either you have 10 rands, 100 rands, or 1,000 rands. There is an opportunity for everyone to invest and make a return. Firstly, you need money to start investing. Like they usually say, you need money to make more money. And the mistake you should never do is to borrow money for you to invest, because the market is very much volatile and sometimes returns are not guaranteed. The stock market can be very unpredictable. You know, like they usually say that you cannot time the market. They actually mean it. You cannot time the market. You could buy shares today for 100 rands and then tomorrow the price drops to 50 rands and it stays at 50 rands for 12 months straight. So borrowing money, which you are going to be charged interest on it, is not a good idea. So the best thing you can do is to get an income, get a job or start a business, but just do something that is going to guarantee you some sort of income. So do what you must to get an income. So try by all means to put yourself out there to make sure that you get an income for yourself. And in general, in as much as the market in the short term can go up and down, generally in the long run, the market goes up. So you can invest 100 rands today, and then in the coming 12 months, it gets to 50 rands, but then in the coming 5 or 10 years, it can jump to 300. So over time, actually, your investment is going to grow. Now, what is extremely important is that the money you are going to invest should be the money that you are not going to need anytime soon. It's very much important that you get to understand that. If you have saved money for a specific thing, never take it out and put it in the stock market. No matter how much you hear the news or the people saying that, oh, this investment is doing better, this company is doing better, there's a new company on the block and it's going to make waves, just don't make that mistake, because it can be a mistake and it can cost you so much. Like I've mentioned, that the stock market is very much unpredictable and very much volatile. So you could really just lose that money that you have saved up, and you are going to need it to use it in the coming 6 months. So never tap into your savings for a specific thing and take that money to the stock market. Any money you put in the stock market should be viewed as long-term investment. Invest it and don't touch it. Leave it in that account for 5 or 10 years. Just don't touch it in the short term. Let it grow, let it yield you dividends, and you will see that investing pays in the long run. And be consistent, and whenever you can, invest as much as you can. Life is not linear. A lot of things happen in life that actually require money, and in some months you won't be able to invest because you will be required to attend those things that need money. So whenever you can, invest. And for the times where you won't be able to invest, capital growth and dividends will actually work in your favor. They will keep your portfolio growing. And to be honest, this is my reality right now. I couldn't invest in August, and even now in September, I don't have money to invest because I have financial commitments. And you know that as low income earners, when things shake in your life, they shake for days. Like you could literally feel that in this month, I am living hand to mouth, And unfortunately, again, this is going to be the same story in the coming month, in October. So I'm going to continue with investing in November, right? But what is working in my favor right now is the dividends and capital growth. Total portfolio is up 9%, and that is because of capital gains. And also in the meantime, like I say, I'm getting dividends, so my initial investment is growing. Even when I'm not investing, my portfolio is growing. That's why I say that whenever you can, invest as much as possible, because for the months where you are unable to invest, then your existing investments will actually grow your money. So there are ETFs and individual companies, and honestly, everybody needs some ETFs in their portfolio. You can never go wrong with ETFs. And as for individual companies, they may be attractive, yes, but as a beginner, you can find that you don't know how to go about researching a company because it's a lot of work. It's a lot of work, and it requires a certain skill. If you've never learned how to research a company, you won't just get it right, especially as a beginner. So never invest in a company you know nothing about. No matter how much that company is hyped up, if you know nothing about that company, do not invest your money in it. Like I usually say that we buy the business. We're not just buying the share price because you feel that you can afford it or it looks like it's cheap. No, we are actually buying the business. So if you don't know what the company does, you literally have no business investing your money in it. But then if as a beginner, you really want to invest in individual companies, then go for big companies that are already established, because then at least you have an idea of what they do, of what their business model is. Maybe not in detail, but you can have a clue of what they do, and sometimes that is enough. For example, supermarket and banking companies. Who does not know what ShopRite does? Who doesn't know how FNB or ABSA or your Standard Bank make money, So go for those companies that have a big market capitalization. You can see how much they have as their market cap on websites like investing.com and Yahoo Finance. So go for those big companies if you really want to invest in individual companies without doing so much of your research. But that does not mean you must never learn how to research a company. So stick to the companies you know and the companies that are performing well. You may know a company but find that it is not performing well. So stick to those that you know and are also performing well. And personally, I avoid penny stocks because they're too risky. So as a beginner, when you're still learning on how to invest, try to avoid penny stocks in as much as you can until you feel that you understand what you're doing, you understand how to go about investing and how you're going to navigate the investing world. You need to also understand how the stock is doing relative to the market. If the stock is up 10%, you cannot just conclude that, your stock is doing well if the market is up 30%. It's very much important for you to know how your stock is doing relative to the stock market. And also, if the stock is down 5%, you cannot just conclude that your stock is not performing well and you feel that you've made a bad investment decision. Now, if the general market is down 20%, then your stock is not performing poorly, because the market is down way more than the stock is. Another tip that is very, very important is that you need to rent cost average your investments. Let's say you have 5,000 rands. You cannot just invest all of it all at once. You need to invest it over time. Either you think the market is overvalued or undervalued, you just need to make sure that you invest it over time and you get to be consistent in your investing. And this one can either make you or break you. Emotions, guys. Emotions. You need to learn how to control your emotions. One thing I've learned about money is that it is more about your behavior than it is about money. You need to learn how to control your emotions. You need to be disciplined. Some people cannot control their emotions. They literally look at their portfolios every hour, every day, and don't be that person. Just refuse to be that person. And honestly, I am calling myself out because I do check my investment sometimes. Like it gets worse sometimes, and sometimes I can go 2 weeks without checking my portfolio. But sometimes I don't know what will be happening. I will just check it, like every day. I have no idea, but I have learned to control my emotions and it got better over time. Not perfect, but it really got better. So try by all means not to tie your emotions to your investments. Because if you think about it, you can make bad decisions. Remember that the market is very volatile and we are so emotionally attached to our money. When you see your stocks declining, you immediately go into panic mode. You're thinking, oh my goodness, I'm going to lose my money. Oh my goodness, what if this stock does not bounce back? Like, you get to have all of those thoughts, and you might end up selling your investments. And you could find that the market is declining due to short-term factors and is going to recover soon. But because of your emotions, you have already sold your investments, and you would have sold at a loss for that matter. Remember, in the stock market, you only lose money when you sell at a loss. Those gains or losses in your portfolio are called unrealized gains or losses because you have not yet realized them. So you have not yet made money or lost money. Before you decide to sell a stock because it's declining, go and find out what could be happening so you can make an informed decision about your investments. So keep your emotions off the table. Try by all means to keep your emotions off the table. The last tip is that you need to diversify your portfolio. We talk about this all the time. You know, when you hear about investments, you also hear about diversification. So it's very much important that you get to diversify your investments. Invest in different sectors because really you never know. Imagine now if you have 100,000 and you take all of it and invest in ShopRite. You never know what is going to happen to ShopRite in the coming month, 3 years, or 5 years. So if something happens to the company or the industry, you're going to lose all your money. But if you have diversified your portfolio, maybe you would have 10,000 in ShopRite, 10,000 in F&B, 10,000 in a mining company, 10,000 in a healthcare REIT, you know, then when one industry is facing some challenges, then the other industries are going to carry your portfolio. So it's very much important that you understand the importance of diversification and make sure that you diversify your portfolio. And that's it on my investing tips. I hope they're very much helpful, and hopefully you are going to make better investment decisions, or you're going to become a better investor. Thank you guys so much for watching till the end. I will see you in my next one. Bye.